Hi, welcome to the Market Alert for Thursday, the 1st of June 2023. So, crunch deal to raise US debt ceiling passes through the House of Representatives, as I said it would before D-Day. So again, we see the can being kicked down the road. However, there's a strange anomaly in there that they're not going to raise the debt ceiling until January of 2025. So they're still going to print 4 trillion, but they're not raising the ceiling. So work that one out if you can. It's a bit of a smoke and mirror scenario. But the key to this is, again, they will continue to do this until they can't do this. And I don't see any end to it personally. We're now in, from 2008 all the way through to where we are. So 15 years or more. And then we're still raising the ceiling. They do it every time. The only difference is we may get the frequency of it. But otherwise, once the interest rates start to come back down, then we'll go back to where we were, and then continue to keep printing and raising the debt ceiling. So the status quo remains, as far as I can see. Like I said, they wouldn't default. There was no way they were going to default. So yeah, it's gone through the House of Representatives. Let's see what happens next and what the markets make of it today. Other news, hawkish bets unwind on dovish Fed speak and weak manufacturing data despite hot jolts numbers yesterday. And the same again, US stocks were lower after weak Chinese and Chicago PMIs, although jolts data jumped. Economic news for today. We've got CPI flash from the EU. That's the EU flash CPI, and Lagarde is speaking at 10:30 a.m. and then we're over to the ADP numbers, so that means we've got non-farm numbers tomorrow. Then if we've got ADP today, I'll check that in a second. And we've got unemployment claims, manufacturing, and Harker is speaking. So let's just have a look, see if we've got non-farm. We do indeed. We have the non-farm tomorrow, so the market will be trying to factor this in. This is already forecast to be less than before. Again, we know what they do with these numbers. They always come out bad and then they adjust them within 10 minutes and then they reissue the figure and then the market turns around and goes up. So we know the trick with that one. Right, let's have a look at the markets for yesterday, see what the Dow did, and work our way through to the other markets as well. So in the Dow, we can see we traded down to the 78% retracement in the daily chart. From here back to here, the market found support at this level and then moved higher. And in the 30-minute chart, you can see where that 78% retracement was. It was at the open. The market then kicked in with the buying. We see the selling was starting to drop. This switched to green, and we brought the market back to the upside where it has remained. Currently above the DP, the market seems fairly happy with having retested overnight and is now moving back to the upside. This is obviously the moment when the deal was passed, so we've had the shakeout there, so the market should move to the upside, but you never know. Anything could happen before then, so we'll just have to see what happens when the market opens. But at the moment, if we just look at the smaller time frame, 5 minutes chart, there's the shakeout there, and then we're moving to the upside at the moment. So in the German DAX, this trading down to just below the 15,658, and big move to the downside yesterday, but we got support to the left. You can see where the buying came in before, and then the market moving up to make that new all-time high. But we've pulled back, and we're pulled back to this 15,658 level. The actual low on this one was 26,626. So we're nearly 15,600 is where it 15,600 is where it came back to. So again, you'd expect a bit of support there. We kicked off yesterday. We spoke about the weakness the day before, and as I said in yesterday's market alert, expect the market to be moved to the upside. The overnight weakness, which we saw there, was discounted, and they brought the market back, which you can see there. We then had a retracement of 78% before we saw the market fall out of bed with the Dow on the debt ceiling negotiations. A lot of selling there, but again you can see it dropping off. We then become oversold, get the crossover in the stochastics, the momentum there, and the market moving back. Just needs to get above the DP in order to move higher and tackle yesterday's high, which also has the 50 EMA and the 200 MA in its wake. The 5-minute chart for yesterday, you'll see this in more detail. When I recorded, the market was moving sharply lower, and then the cash market opened. We did have an initial shakeout. You can see the buying coming in there, and then we brought the market up. We became overbought, which you can see there, but we've already got a drop off in momentum. Then as we move across there from the loss in momentum, we come down and we're oversold. The momentum then switches back to the upside, and we have a quadruple top there as the market struggles. Also, if we go from here back to here, that will be a 78% retracement. I'll just draw that in for you just so that you can see. And there's the fib retracement, 78. You just get used to seeing these visually. 78%, and again we've got a situation where we're losing momentum as the market attempts to move up, and then down she comes again as we get ready for the opening of the Dow. So we get a sell-off before the Dow, a bit of support during the Dow, and then we follow the Dow to the downside, which you can see there, and that's down to, guess what, the S3. So as I've said before, if you go through the S3, you'll want to come back through it or hold at it, and we went through, we retested, and then we came back through. S3 is a very, very powerful level, as is the R3, but more so on the downside. Because they don't want the market down. If they can get it back, they'll buy it back as much as they can to bring prices back up. So overnight in the 5-minute chart, you can see there that we're just above yesterday's close. There's the debt ceiling deal. Market's retraced and moved up. Needs to get above the DP there. This week's trades are 501.50, 344 for yesterday, and 7.69 on the profit factor there. We've got 67.33 there for the win-loss ratio, or 67.34, whichever way. Again, doesn't really matter. I'm not really too concerned about the win-loss ratio. It's this one, the profit factor, 7.6. As long as that's over 2, you're going to be making money. And 501 on the profits there so far for this week. And in the US again, we've got the S&P trading down to 50% retracement, 20 bar moving average up on the overnight. And in the 30-minute chart, again, you'll see that we came off the low of Tuesday, and the market moving high. We've also got an 89% retracement inside of here as well, as the market came back and then moved to the upside, tested it and moved. Then we became overbought, 62% retracement, and then down. The news there, and then we've got to the market sitting at the S2, and then moving back to the upside there. Struggling with the 200 MA though in this area each time it's hit it, but so far managing to get back to the DP, but a bit of resistance around in the S&P at the moment. In the UK 100, we're down to 78% yesterday. We've got demand there, we're oversold. We're still below that 200 MA though, so we'll need to try and do our best to get back above this during today's session. And in the 30-minute session, just as we spoke of yesterday, as the market had moved down on the overnight, they came in and brought the market back to the upside. We double topped at the low, became a resistance level, and then as soon as we switched to the red side, the market moving down sharply, and then attempting to move back up. At the moment, starting to show a bit of more sideways movement, trying to hold and an attempt to get back above the DP there. And in the currencies, GBP, JPY down yesterday, but moving back up to towards the high of yesterday on the overnight, as you can see there in the 30-minute chart. Yesterday's price action, again, we've got this double bottom or triple bottom, back up to the 200, back to 89, back up on the news, and then stuck in the sideways range until we broke out earlier, and trying to, like I say, get back towards that high at the moment. Meanwhile, in the pound, up again yesterday, but we were down to start with. They brought it back with the JOLTS news and the manufacturing news, which you can see there, very messy. And down, first thing, just below the 200 MA, tested, brought back, news, and then continuing overnight, and now moving back as the US dollar is starting to gain some momentum to the upside as the debt ceiling deal is done, and they've averted the prospect of a default on their debt. And in the US dollar, there you can see it's attempting to move to the upside because the deal is done. We'll see how long that lasts as the market starts to digest the fact that there's another 4 trillion that's just been added, even though they've not raised the debt ceiling. Again, I can't work that out. Anybody can, let me know. And finally, in the metals, a good day yesterday for the silver market, also for gold as well, trading up to 62, but if the dollar continues strongly today, this will be pushed back to the downside. In the 30-minute chart, you can see again the news yesterday spiking down and then bringing the market back up as well on those less than hawkish comments by the Fed speaker yesterday. I think the name was Harker, wasn't it? It was Harker that spoke yesterday. So up in the first part, back to the close, 62% retracement, sitting on all the averages, market back up. Overnight, the market is currently sideways. Needs to take out the high if it's going to move higher, but like I said, that's going to be dollar dependent today. In the gold market, nice move back up yesterday, trading up to 78% retracement. And at the moment, you can see the market starting to look a bit weakish there. And in the 30-minute chart, yesterday we moved up. We came back to the 1950 level. And inside of the 1950 level, we saw near enough 100% retracement before moving up. We've got the news there, reaction to the news. And then sideways overnight at the moment. Needs to get above the DP and the close if prices are to move higher. And finally, the gold-silver ratio. Silver outperforming gold yesterday as the gold-silver ratio moving to the downside, and a bit of red there this morning as well. So silver looks like it's playing catch-up once again. Okay, that's it for this one. Let's see what the market thinks of this deal. It's freshly baked. So it's down to the European markets to actually react to this at 7 a.m. and then 8 a.m. for the cash markets onwards. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.